Hello everyone and welcome to a new episode I2I Crypto. I'm your host Rocco, and today we're going to talk about this latest news about the crypto trap. That's what I call it, for the mortgage collateral risk. Why I don't really like, that's my opinion guys, of course, it depends on your philosophy on crypto and what you think about it. Why I don't like this news, why I don't adopt, I don't embrace the totality of this news. Well, we can have a split view, okay? On one end, adoption is greater now, and you see even the Feds recognize crypto as an asset, but this can become like a Trojan horse. What I mean about this? Okay, and again, I like to kind of speculate, open a window of ideas for you guys to think about it. The FHFA just approved this, the crypto as a collateral for mortgages, okay? Which it can be fine, I guess, and that's for Fannie and what is the other one? The Freddie, I think it is mortgages provider. Yes, in one end, maybe for some people they see this as a great opportunity, where you can kind of borrow money in a certain way using crypto as a collateral. But of course, you can give your crypto as a collateral to buy your house. But it's the way you disclose that I don't like it. So now you don't need to longer convert your USD to your crypto to USD. Now you can use your XRP, Bitcoin, Solana, Cardano as a collateral to have a mortgage. But what that means? It means that these banks and institutions now, they must have access to your crypto accounts. It can be in an exchange like Coinbase or whatever. So it has to be held, these funds, this crypto has to be in a US regulated decentralized exchange. What this means, this exchange, they do have the KYC. So they know your customer. So they know exactly who you are, how much crypto did you have, how much crypto you may gonna use as a collateral. If you are in DeFi, that's completely another argument. What I'm trying to do here is going a little bit, I think there's gonna be so many products out there, they're gonna be great, where you can use to borrow money against your crypto. That's not what I'm talking about here. That's your wallets, they're gonna be trackable now. Is cold storage is gonna count? It's DeFi wallets disqualified? What about if you have a certain crypto? What about if you have a Doge? That doesn't count anymore? Or maybe there is some restriction on some other one? How the banks they're gonna use this information for you or against you? So now banks can see pretty much your crypto when reviewing the status of your application. And they're going to decide if you are financially sound based on your crypto holding. But that's not the problem. The problem that I have is now is another one. What happens if you get behind on a credit card payment? Now your information are out there, and for sure they're going to link to your credit bureau agency. Then now you have this amount of income, this credit card, this amount of crypto there, and your loan, your car loan. So what happened now? Let's say you want to have a mortgage, and now in a traditional mortgage, when you go to apply for it, if you have even $10,000 in credit card, they ask you to pay off all the balance on the credit card because they feel more insured. But what happened now if you have a crypto as a collateral, as an asset, and they say, okay, now pay off all the credit card. Now you need to liquidate your crypto if you don't have a USDT, and which means you're going to lose also money because it's going to be capital gain. And now you lose money as well as for taxes. But what about if you have an accident now with your car and your car insurance doesn't cover the whole thing? So where is the limit of the crypto liability now? As you're liable now because everybody knows you have a crypto in a store, in a cold wallet, in a hot wallet, how that works. So for sure, you guys gotta take care of this before and make sure you have your crypto, not in your name, but in a And I recommend to check Jack Cleaver videos because they kind of offer service. I don't have any affiliate link or anything, but it just makes sense. So you got to protect your assets. If you have a certain amount of XRP or whatever other crypto, you have to make sure that you have there in a LLC, and if it's something up to you, they cannot come after you. So, but what happened, let's say the insurance, the car insurance doesn't cover completely your accident, you were at fault, now they come over after your crypto. The information is there. If the bank says it, for sure the insurance is going to have it too. Perhaps they're going to come over and say, hey, major, I don't know, car insurance is going to say, hey, if you have crypto, I give you 20% less on the coverage, but at what risk? Is that worth it? Is that definitely worth it? Or you better off just don't use this program for mortgage and give you your asset as a collateral. I don't think this is a good idea. I think you're better off just don't buy a house by using your crypto, or just pay in full if you can get to that much money. I don't know. So what happened then? That's liability that is getting involved. Your wallet can get pulled and say, okay, you have this much of crypto, now you need to pay off whatever there is. And I don't think it stops just in a mortgage, in car insurance. This is going to be, it can be even to, I don't know, if you have a garnish in your check. Now they're going to go after your crypto. And by the way, guys, like and subscribe. If you want to stay ahead of all these kind of topics that we discuss, if you are an XRP holder or not, make sure to turn on the notification bell so you can always catch up the live stream as well and the latest news as well. So all this kind of, let's go back about what I'm thinking here. All this kind of hidden regulation, it can be a double sword event, I will say. In one end is a big adoption and crypto becomes more legit. In the other hand, you have all these problematics that get involved. And the way I don't like it is how they say, like, oh, look, now the Feds, you see, finally, yes, big victory. I don't like that. I'm not happy about that. I feel like this it's been disguised as a little lamb. Instead, is this a wolf ready to catch and get into your crypto. That's my own opinion, okay? So if you are trading and then you're all of a sudden you try to keep your privacy alive, this paperwork for a mortgage is definitely gonna jeopardize your privacy. And again, all it takes then is from like we see with Google, Apple, Telegram. Your information now, they're all in the major credit bureau, and now all it takes is just one big hack, all your information, and everybody knows that your crypto is there. So how are you going to do that? And then at least there is a limitation. They can decide your mortgage ratio based on that, which they're already doing now, but I don't know really how that's gonna work. They're gonna, I know that you don't have to use your crypto as a collateral. I just say they know it's there. You perhaps can get your money just while borrow money to get your mortgage, but they say, okay, I have this much money in there. But how that works? Somebody can just transfer $500,000 in your, I don't know, Coinbase account on XRP, and I don't know, take it back the next day, and now you're showing that you're worth 500 because that's almost immediate. So, but anyway, guys, thank you very much for following us. Until next time, ciao a tutti.